Welcome to our comprehensive EUR JPY analysis report covering the period from September 15th to 20th, 2025. In today's presentation, we'll examine the recent price action, technical patterns, and fundamental drivers affecting the euro-yen currency pair. We'll also provide actionable trading recommendations for both short and medium-term horizons. This analysis incorporates data from multiple trusted sources, including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex to give you a well-rounded perspective on this important currency pair. Let's dive into the details and uncover the opportunities in the euro-yen market. Let's begin with a market overview of the euro-yen pair. Currently, EUR JPY is trading at 173.820 yen, showing a slight daily decline of 0.35% or about 0.612 yen. The pair opened at 174.348 and has been trading within a range of 173.483 to 174.504 during the most recent session. Looking at the broader performance metrics, EUR/JPY has demonstrated positive momentum across multiple timeframes. The pair is up 0.24% over the past week and has gained 1.23% over the past month. More impressively, it has appreciated by 7.62% over the past 6 months and 9.21% over the past year. As you can see on the chart, EUR/JPY has been consolidating after breaking through the 173.77 to 173.80 resistance zone, but losing momentum as it approached the 174.48 level. This price action suggests a period of consolidation as the market digests recent gains and central bank developments. This context sets the stage for our deeper analysis of both technical and fundamental factors affecting the pair. Now let's examine the technical picture for EUR/JPY. As we can see on the chart, EUR/JPY is forming what technical analysts call an ascending triangle pattern. This pattern is characterized by a flat upper resistance line and rising lower support line, suggesting accumulation and building bullish momentum. The key resistance levels to watch are at 174.48, which is the recent high where momentum stalled, 175.41, representing the 2024 high and a critical resistance level, 175.50, a swing high from mid-2024, and 177.00, which is the measured move target from the triangle pattern. On the support side, we have 172.11, which is the critical level maintaining the bullish outlook, 172.00, an area with 50-day EMA support, and 169.70, which would be the key breakdown level that would invalidate the bullish scenario. Turning to fundamental factors, the EUR/JPY pair has been significantly influenced by central bank policy decisions during our analysis period. The Bank of Japan held its policy meeting on September 19th, maintaining its policy rate at 0.5% as widely expected. However, there were important hawkish signals in this decision. 2 board members actually voted to raise rates to 0.75%, indicating growing support for tightening. Additionally, the BOJ decided to start selling its ETF holdings, representing another step toward normalizing its ultra-accommodative policies. On the European side, the ECB has held its key interest rates steady, with the deposit facility at 2.00%. ECB Vice President Luis de Guindos emphasized a very prudent approach given high uncertainty, while other governing council members indicated that rates may not need further cuts at the moment. This suggests the ECB's easing cycle may be nearing its end. Meanwhile, the US Federal Reserve cut interest rates by 25 basis points to a range of 4.00% to 4.25%. This decision supported global risk appetite, which initially benefited the euro over the safe haven yen. On the economic data front, Japan's core CPI eased to 2.7% year-over-year in August, down from 3.1% but still above the BOJ's 2% target. Food prices rose 7.2% year-over-year, moderating from 7.6% previously. This combination of central bank divergence and economic data has created a complex fundamental backdrop for EUR/JPY trading, with the pair consolidating as markets digest these developments. Let's review the key news events that shaped EUR/JPY movements during our analysis period. On September 16th, the Federal Reserve announced its rate cut decision, reducing interest rates by 25 basis points to 4.00% to 4.25%. This move supported risk appetite and initially weakened the USD across major currency pairs, creating a positive environment for EUR/JPY. The following day, on September 17th, ECB officials made important statements indicating that rates may not need further cuts at the moment. Vice President Luis de Guindos advocated for a very prudent approach, given the high uncertainty in the economic outlook. These comments provided support for the euro. September 18th brought the release of Japanese inflation data. Japan's core CPI eased to 2.7% year-over-year in August, down from 3.1% in July. This marked the third consecutive monthly decline but remained above the Bank of Japan's 2% target, reinforcing expectations for eventual rate hikes. By September 20th, we saw the market reaction to these events, with EUR/JPY breaking below 174.00 after the BOJ's hawkish signals. The pair entered a consolidation phase between 172.00 and 174.50 as markets digested the implications of central bank policy divergence. This timeline of events provides crucial context for understanding the pair's recent price action and future direction. Now let's focus on the short-term outlook for EUR/JPY over the next 1 to 2 weeks. As shown in our projection chart, we expect EUR/JPY to remain in a consolidation phase with a slight bullish bias. The historical price action is represented by the white line, while the gold and darker gold lines show our bullish and bearish projections respectively. For traders looking to capitalize on this market, we've developed two strategic approaches. Our long strategy recommends entering positions in the 172.11 to 172.00 support zone, targeting the 174.48 to 175.41 resistance area. We suggest placing stop losses at 171.80, giving us a favorable risk-reward ratio of approximately 1 to 2.5. For those preferring a short strategy, we recommend entering at the 174.48 resistance level, targeting a move back to the 172.11 to 172.00 support zone. In this case, stops should be placed at 175.00, providing a risk-reward ratio of about 1 to 2. It's important to monitor upcoming economic events that could impact the pair. On September 22nd, we'll see the release of Eurozone, German, and French flash manufacturing and services (PMI) data. Later in the week, on September 26th, Japan will release its services producer price index year-over-year figures. The pair's direction will largely depend on risk sentiment and any additional central bank communications. In our bullish scenario, a break above 174.48 would target the 175.41 resistance. Conversely, in our bearish scenario, a break below 172.11 would suggest a deeper pullback toward 169.70. Looking further ahead to the medium-term outlook for EUR/JPY over the next 1 to 3 months, we've developed two primary scenarios. Our chart illustrates three potential paths: the bullish scenario in green, our base case in gold, and the bearish scenario in red. As you can see, these projections diverge significantly over the 3-month horizon. The bullish scenario, which we assign a 65% probability, is predicated on three key conditions: the Federal Reserve continuing its easing cycle, the ECB signaling an end to its easing cycle, and global risk sentiment remaining positive. Under these conditions, we project a target range of 175.50 to 177.00. The recommended strategy here is to buy on dips, focusing particularly on the 172.11 to 172.00 support zone. Alternatively, our bearish scenario, which we assign a 35% probability, would unfold if the Bank of Japan signals a more aggressive hawkish stance, global risk sentiment deteriorates, or European political risks escalate. In this case, we'd expect a target range of 169.70 to 168.00. The appropriate strategy would be to sell on rallies, focusing on the 174.48 resistance level. Effective risk management is crucial in this environment. Monitor Bank of Japan hawkish signals and global risk sentiment shifts as primary risk factors. The key invalidation level for our bullish thesis sits at 169.70. This analysis has been prepared using data from TradingView, Investing Live, actionforex.com, forex.com, and Daily Forex to provide you with a comprehensive view of the EUR/JPY market. Thank you for watching our Euro-Yen analysis. If you found this information valuable, please like, subscribe, and share your thoughts in the comments section below.